The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rockin' music means it's time once again for the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as the old Options Insider Radio Network. And I am joined today on the old all-star panel to kick off this trading week, indeed this expiration week, by a couple of returning regulars. Well, at least one returning regular and one person who is starting to fill that returning regular seat on a fairly regular basis. So I think we can call him a returning regular. So we'll start with him. Good old Sean Fitzgerald holding down the OX hot seat today. Mr. Fitzgerald, welcome back to the program, sir.
Glad to be here. Always enjoy it.
Once again, you are dripping with enthusiasm, sir. It drips off the microphone.
dreading that walk home in the heat today.
Yeah, it's a pretty not as bad as it has been today in Chicago, but still fair. Oh, I guess it's in the mid 90s now, so getting up there. So that
might be tipping the scales tomorrow around 100.
Yeah, that's true.
Just look at the crop report, or just look at corn futures every day. Then you can tell how hot it is outside.
There you go.
I only need to look at my grass.
That's your direct hedge to, or your direct inverse relationship to the weather. Just look at the crop report. That voice, of course, listeners, is none other than the Rock Lobster beaming in, I should say, all the way from the lovely, lovely shores of Maine, where he has taken time out from his beach going to join us on the old All-Star panel today. Mr. Andrew Giovinazzi, welcome back to the program to you as well, sir.
Thank you. It's a pleasure being here, although Maine is still lovely, except for the price of lobster, so my poor lobster fishing brethren out there are not too happy. They're not even jumping in their boats and going to pick them out of the water. They're so cheap.
But for people who sell the lemon spritzers, now they're making the killing right there, and butter.
Exactly. It's like I think, what is it? It's like $1.50 or $2.50 a pound off the boat. That's what they're getting, which is like nothing.
That's hardly even worth going out and scooping them up at that point in the lobster pots. Wow. Pretty
much. And they're all soft shells, so you can't transport those guys. So they're all for consumption here. So it's not like they're still playing lobster, though, that's for sure. So
again, my analogy between Kuwait and Maine continues to hold true.
Exactly.
If only
lobster
you could power
for me every night.
If only you could power your car with lobster oil, you'd be ahead of the game, sir.
Absolutely. I'm just trying to figure out a way to do it with the crushed lobster shells.
I'm not too much juice in those, I don't think. I have a hard time with those.
Yeah, they're a little rough to handle.
All right, and speaking of rough to handle, it's time to dive right into the trading block.
The trading block.
All right, and that ringing bell means it's time yet again for the old trading block. And today on the old street, it was very much in many ways a repeat of what we've been talking about in the past few shows here, with the market closing down a bit soft, but nothing extreme, nothing dramatic. This market threatening to rally towards the end of the day, and that yet again not managing to erase those losses and closing down a little bit south of unched on the day. We have the S&P closing down about 0.2% to 1353. The Dow closing down nearly about 0.4% to 12,727. Good old NASDAQ also down about 0.4% to 2896. And the VIX cash getting some weekend love back and getting a little sell-off love back, but again, not perhaps as much as you might have expected given all the activity and the vol we've been seeing of late. So the VIX cash tweaking up about 2% to 17.06. And we'll start there, as we are wont to do on the old trading block with the VIX. Andrew, were you once again surprised and chagrined at the VIX perhaps failing to really to do much in today's action?
No, I think I'm actually kind of expecting the VIX to sort of plod along here into earnings, as it generally will. When as earnings season goes, it's more the news is kind of out, and the volatility in general, unless there's a European crisis or some other financial crisis around the board, volatility tends to drop from that second week in the vol cycle, or about week 1 all the way to week 3, just because those earnings come out, they sort of tell the story of how the season's going to be, and then whackola goes the volatility. So most of the VIX being up today at all is just putting the weekend back in, and it can only manage around 42 cents actually. And I even think I saw the VIX cash down at one point today. So it's definitely they're running out of a little steam. Yeah, traded 16.5 at one point. I think that was probably just a weird mark from coming from the SIBO, but 1660. It feels like still some sort of weakness in the vol products. It's hard now to really want to be actively short it, I would say, but it's just, I think it's mirroring everything else. I thought actually the market didn't perform that badly considering how bad retail sales and things like that. So it really feels like the market still wants to rally, and the volatility indexes kind of keep saying the same thing. Essentially, they don't rally much, Speaking
of volatility weakness, the good old VXX, I know that's your favorite of all trading products, and that one's hovering around some all-time lows as well. So there's a lot of love floating out of VIX land right now. I think
that'll split again, because that's all it can do. Well, actually, it splits in reverse, so we'll have another 4-for-1 reverse split. And
you think it'll pull a TVIX and decouple and jack up and then come right back down the other side again?
Yes, I will. Yes, it will. It will continue. It's the product I love to be short. It's my best trade of the year, being short the VXX.
Good old TVIX, still putting up some numbers. Did about 7 million shares today, and trading around 344. So people still getting in and out of TVIX, apparently. I'm not sure. I guess they haven't learned their lesson on this one, but yeah.
Total waste of money.
That 344 could go to zero in a heartbeat, as we have learned in the past. So TVIX still lighting up the old tape, though I should say south of its average volume of about 14 million, so it's doing about 50%. But still, I think anyone even expecting that level of numbers, it would be relatively surprised given the just the apocalypse that TVIX has been. TVIX apocalypse. Sean, what has been catching your eye today? What caught your eye in today's trading activity, or perhaps on the old trading desk today?
Actually, what stood out the most was Facebook and the heavy selling volume here. Well, I guess you want to call it selling volume, but we pretty much dropped below 30 for the first time since mid-June. Traded roughly 24 million shares. It's the first time we traded over 20 million shares since June 27th. So roughly about 3 weeks of trading. Did notice quite a bit of calls into the line. People looking to buy puts all the way down the $25 range, expiring this week. A little over 3,000 went off. So I thought that was a bit odd. Buying, early in the day, I was getting some calls and it was still hovering around 30. People looking to buy $25 of puts, expiring in 4.5 business days.
Yeah, you're right. There's about 3,000 of the July 25 puts went up today. So that's either people
caught my eye quite a bit
people
there.
Scrambling to cover some shorts, or they just really are outwardly speculating like mad, one or the other.
It could be the last few people that never sold the IPO and just hedging.
It's an odd hedge. A week, 4 days to go for a nickel. These things, there's about 14,000 open on this strike, so it could be some people. We heard a lot of people going into the doldrums of Facebook last month, writing into the site and even into the show saying, should they short these, 23 to 25 range of puts? And a lot of people did that. Maybe some people are just deciding to take their money off the table, as we are always counseling here on this show. I'm going to be charitable and assume that's what that was, and not some mad flight to downside spec. Otherwise, Facebook's got to take a bit of a tear over the rest of this week to really make those puts favorable. Andrew, was this you? I know you love buying juice, but this is a little bit out of the money even for you, sir.
Yeah, I know. It's funny. I've looked at in the morning. I got a little busy this morning, so I couldn't look at it. But generally, when I see with a week to go on Facebook, if I see that at the money straddle like 90 cents or less lately with 4 trading days to go, I buy one or two. They paid every week, and same thing this morning. They right on the opening, the straddle got cheap again, crushed all the juice out of it. And, by the end of today, it was worth $2.80. So it's not one I bought today, but I think that stock, when the volatility gets to the 30s with 4 days to go, that's good premium to buy. It's a good trade. So same thing happened today. Now vol's trading 60 and change.
Yeah, front month got a bit of a spike 50. Today.
Yeah, definite volume. Maybe some earnings are leaking. I don't really know, because I couldn't really find any bad news on them. So, except for somebody refinancing their house for 1%, or something random like that. But
all the fun searches you get when you search for Facebook and problems. But
exactly.
Yeah, looks like August trading for about 60 vol too. So it's hard to really talk about front month in terms of vol when you're 4 days to go. But the AUG also trading around those same levels. So yeah, vol spiking across the board. Something is up. A lot of downside premium going up. And on the put side here in AUG as well, 23 puts, 24 puts, 3,000, 25 puts, 3,000, 4,000 AUG, 26 puts. So people still specking on the downside here. I haven't dug into the open interest or these volume numbers today to see if those were predominantly sales or buys, but given the frenetic tone of many of Sean's calls coming into the desk today, it sounds like there probably were quite a few buyers. Although overall on Facebook today, it was still about 1.5 to 1 call to put ratio on there. So call traders still outnumbering. Of course, net delta is down about 1.1 million, which is a fairly substantial amount. So I guess a lot of call sellers piling into Facebook today as well. Of course, Andrew alluded to it earlier in the trading block, and the market took a bit of a hit today, primarily because of those unexpectedly dire retail sales numbers. We saw retail sales down about 5% in June. No one was really expecting that dire of a drop, so that cut some of the strength out of the market today, and we never really had a chance to recover from that. Of course, other stories that interest us here on the old show, of course, that JP Morgan hedge, quote-unquote, that we talked about a few months back when they announced it. They, of course, have since announced their earnings, and they're expecting it to be about 5.8, nearly 6 billion on that trade when they initially came out and said 2 billion, so already 3x. And that, of course, is due to the charitable nature of the market fading these guys every which way from Sunday as soon as they saw this position was on. Of course, as we expected, as we said here on the show way back when this was announced, that and you can just say this like clockwork every time one of these scandals erupts, and it's always the same thing. Someone's just blown out a ton of premium, and they get in way over their head, and they're looking to collect income, and they love it, and it works for a few months. You look at Nick Leeson, all these rogue traders, they all do essentially the same thing. They blast out a ton of premium. It looks good on their books for a few months, maybe even a few years. They're collecting premium. In this case, JP Morgan was blasting out premium in a very illiquid credit derivative, CDX IG Series 9. That's my favorite, I know. I wake up every morning and look up the quotes on that before I start my day. Of course, the street got wind of what they were up to and faded them heavily to the other side, and that's when their woes began. But as we expected, essentially just a bunch of guys blasting out a bunch of premium. Andrew, I don't know, I'm getting tired of hearing the same old story. I mean, every time we hear this rogue trader, it's our rogue firm in this case, it's always the same thing. They get greedy, they blast out a bunch of premium, it looks good on their sheets, and then it goes against them, and they come out and say, oh, it was a hedge. I'm not sure how blasting out a bunch of premium in this CDX IG Series 9 qualifies as a hedge, but perhaps you have a more convoluted definition of hedge than I do, sir.
Well, I think it's the thing that blows all these guys out. It's always some kind of carry trade where they're long. Let's say in this case, I think they're long like a 9-month duration, and they're short maybe a 4 or 5 year duration, which might have sounded good if the whole world was coming back to zero volatility in March, but of course by May, everybody got freaked out again. So that stuff just kind of stays up there forever. So, and that was a hedge that went wrong. The problem is the good side didn't perform. I mean, it's still a pretty good sized trade. I mean, how much the notional value is on that thing. So plus they're going to, and they're going to have to roll the front month at some, crappy price, because nobody's going to really let them trade it.
Yeah, imagine the markets are getting on those right now, and they're quoting those rolls. It's got to be extremely painful.
So,
what I find funny about these rogue traders is never hear about these rogue traders who happen to make a few $1 billion. They always only talk about the ones that are in the hole.
That's just a trader. They just call that a trader. They rope him in and they congratulate him and they give him a cigar and a nice bonus. The rogue guys are the guys who lose money.
Even though we didn't authorize you to make that $5 billion, but we're thanking you.
Of course, yeah, they'll take it. And here's your 1% discretionary bonus, and I'll keep it between us.
Well, see, on the sheets, though, it looked like the Vega was flat, right? The Vega was only, what's the weighted Vega or whatever was only...
Yeah, there you go. That's what it was. The oldest trick in the book. Oh, I'm flat Vega. Look, I got no risk.
I'm long gamma. I'm good. We're good.
I'm clean. Good. Sounds like the risk management people over at JP Morgan were about as experienced as the auditors NFA was sending out to keep PFG in line. Apparently, those people also straight out of school and don't know a thing about futures or derivatives, because that story is still spinning. We talked about it a little bit last show, and it's still spiraling ever deeper into the machinations of Russ Wassendorf Sr. and his crew over there to conspire to steal all this money from their customers. It's amazing how this story seems to just have permeated. Perhaps it's just a Chicago thing. I'm not sure if it's happening to the same degree out in Maine, Andrew, but the other day I was taking a cab around town, and some guy in the cabbie, of course, started going on at length about this story and the attempted suicide attempt. And, same thing when I was walking out of my building the other day, and my security guard, who doesn't know anything about what I do or options or futures, starts yelling across the lobby, "Have you heard about this guy who tried to kill himself, stealing all his blah, 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 blah?" It just seems to be percolating into the public consciousness in a way that some of these other stories do. I think because it has that salacious aspect of the attempted suicide, I think, to capture people's attention. But yeah, stuff's still unfolding. There's just a endless quagmire of thievery going on over there at PFG Best. And it seems like every day every hour, I open up our headlines feed on the Options Insider, and I see just more detail into exactly how this guy managed to keep this scam going for 20 odd years. And apparently it's enough to just send your regulator a forged fax. Oh yeah, we have $200 million in the bank. That's all it takes. You have to have more documentation to get a mortgage on your house than it does to convince the NFA that you have $200 million in the bank.
Unbelievable! It is unbelievable.
It's the most low rent scam ever. He had a PO box and a forged faxes, and he was able to convince NFA for years that he was legit and above board.
I don't know why there can't be an unlimited a number of custodial brokerages, right? And they've got to have their money housed somewhere. So can't those guys pick up the phone and say, okay, custodial brokerage, how much money do they have in their account? This is the NFA, the regulated supervising broker, the supervising agency.
That's the best part is they did that. They did that in January, post MF Global. They did a spot check of all the small and mid-sized brokers that they regulate, and they did a spot check on 70 some odd of them, and they said, oh yeah, everyone else is fine, including PFG Best, and they apparently they were able to skate through that by sending, like I said, a forged fax. That was enough to take NFA off the scent of I mean, they're getting numbers back showing that there's an arrears in this account, and they didn't push it further. It's mind-boggling, and it's
several times. It's not like they've never heard about it.
I know, exactly. Sean, I'm curious. I know you guys are doing a lot more on the future side over at OX. Are you getting a lot of, curious or panicked or questioning calls from customers on the future side saying, what the heck's going on out there? And, should I be trading these products? Is that starting to percolate out there? Or are you guys dealing with more of the, I think, higher end of the retail spectrum where they understand this is kind of a, hopefully, aberrant event?
Well, we got two parts of that story. Actually, the day after, PFG Best, 100 of their employees, they're just a couple floors above us here, over in the OX building. And every time we were walking outside, I think we had the Sun-Times and the Tribune, asking you, do you work for PFG Best? And by that time, I'm pretty sure a majority of the 100 employees here had already left. So it was a little amazing seeing these individuals trying to get as much info out of you as possible, even though we didn't even work at PFG Best. But as far as business-wise going, we're actually starting to see customers, as soon as they're able to move their accounts out, I'm not sure what the stage is, if they're still frozen or not, we are gaining some former PFG clients that are still looking to trade. I don't really think it's scared them as much as the MF Global side did. I'm not sure why not, but we're getting quite a bit of calls, customers telling us their situation. I'm at PFG Best. Obviously, you guys have heard, as soon as I'm able to get my money out, I want to come to you guys as soon as possible. So, no, I don't really think this is really scaring them too much.
Well, that's good to hear. I guess that's not surprising, that the fact that this would maybe motivate them a little more.
Plus, there's a lot of talk going on that sooner or later they got to get, well, I mean, not SIPC, but something where their money's guaranteed.
Yeah, that needs to be a definite step, given just the volume of scandal we've seen on that side of the fence, the future side of the fence. It really is hard to argue that they don't need something like that at this point. And, from an options perspective, I was talking to some of the PFG Best options guys, and they were lamenting how this all unfolded because the firm went into insolvency almost immediately, and so that meant all these customers with options positions, and most of them were futures options customers. So some of these things were fairly illiquid. They had to liquidate them essentially overnight. So they were lifting offers on things that had no offers, and setting things at the midpoint when of the bid-ask spread, when the spread was absurdly wide because they were illiquid and customers were getting just atrocious prints and atrocious fills, just trying to liquidate these positions. It was not an ideal scenario, obviously, for anyone involved, particularly from an options perspective, because it was just horrible prints, horrible liquidations across the board. So it's a lot of pain being felt right now, I'd imagine, by PFG Best customers who were able to even get their funds out, let alone those who perhaps were somehow involved in this ridiculously absurd level of fraud going on over there. But yeah, with that talk of fraud, we're going to wrap up the old trading block, and unfortunately that's becoming a recurring theme of our trading block of late. Hopefully we'll be able to put that theme to rest for a while, but you never know given what's been going on out here. But now it's time to dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. This is, of course, where we break down the interesting and unusual options activity that's lighting up our own personal tapes here. I'm going to kick things off with another newcomer to the Odd Block, Intersil Corp, ticker symbol ISIL. They closed today at about $10 even, $10.04 or so. Pretty much unched on the day. And what we see in this name is usually very inactive, does about 500 contracts or less a day. They did nearly 13,000 today, and the bulk of that was in one very large sale of a straddle, a closing sale actually. The August 10 straddle went up today about 5,000 times, about 5,000 on the day, for prices around $1.30. That includes one massive block of 3,500 that went up at once for about $1.30 as well. And this is a closing trade. We have open interest on both these strikes of about 4,500 or so, both the calls and the puts. So this is predominantly closing activity here. And this stock, it's an interesting one to watch, this straddle, because we talk quite a bit about the difficulties of trading long premium and how difficult that is to make that payoff over the long term. And if you look at a chart here of ISIL, this name really has vacillated aggressively back and forth between the 10 and the 11 handle since essentially March. So if this trader was a very aggressive scalper of his long gamma and he kept hitting that 10 to 11 scalp over and over again, and he might have done all right on this trade over the long term. He certainly could have paid for his decay if he scalped aggressively. But aside from that, there wasn't much really to see that this trade was a home run hit by any stretch of the imagination. And one of the other interesting things we found as we were looking into this, that this is by no means a one-off trade. This 10-strike straddle seems to have been a popular trade in ISIL for a while. As we were researching this, we found write-ups going back to Jan of 09 about someone coming in and trading size on the 10-strike back then, 3 years ago, over 3 years ago now. So this 10 straddle has apparently been the trade du jour in ISIL for quite a while. This guy is closing out his AUG 10 straddle. We haven't seen if he's putting on the other side of it yet, if he is going to do that, or if he's going to take a little time and wait before perhaps he rolls out again. But apparently this is his ongoing trade, which is a repeated trade he likes to do. We see this a lot in a lot of these small names where some size customer comes in, does the same trade over and over again. Apparently the AUG 10 or just the 10-strike straddle in general is the trade du jour. Andrew, are you a big fan of scalping gamma out here in ISIL?
Am I? Stock doesn't move. I don't like that.
It's got a $1 range. You can make some play with that. Not much, but
you would have to have
on a $10 stock, you can't expect too much. Yeah, you have to be pretty aggressive. That's why I said
you have to trade for like a penny a share or less.
I was trying to be charitable when I was looking at how this trade performed and try to find some way that this guy made his money on this.
Yeah, it's not something that appeals to me. Let's see what this. I'm just looking at the money. Yeah, I'll tell you, right at the 10 strike. And look at this though, the August 10 straddle worth $1.30. So somebody thinks there's some volatility. Almost 52 volatility sounds too rich for this stock, but probably I guess we have earnings.
Yeah, this stock's got a $3 52-week high at a low range. So I don't really see much money here to be made.
Yeah, yet this guy keeps committing. He's not blasting out straddles; he's buying them for the most part. So he's someone apparently is likes the long primo trade here on the 10 handle in ISIL. And given the degenerate juice buyer that you are, Andrew, I thought it might be you. Just out of curiosity.
Yeah, you'd have to be a little extra degenerate.
Yeah, that's pretty. I think he has some other agenda here. That maybe he's a size underlying owner. He likes the downside of the straddle and he wants to double up on his upside with it as well. I don't know why. It's interesting. It just seems like there's perhaps another agenda going on, because you're right. It's been going on for a while and doesn't seem to be that particularly effective of a trade. So you have to wonder perhaps if there's some other ulterior motive at work there. But for now, closing straddle sale here in ISIL. And then we're going to move on to PPL Corporation, ticker symbol QXZV. No, I'm kidding. Ticker symbol PPL. I love when those names that have an abbreviation in their company name and yet pick some other stock ticker. It always drives me crazy. But PPL closing today at about $28.60, up about 0.5% today. And this is the name that does about south of 1,000 contracts a day. And today doing almost 10,000 contracts today. And the bulk of this was in what appears to be an upside call spec. We saw about 6,000 of the Jan 30 calls lighting up the tape earlier today for prices ranging between 25 and 30 cents. And also, this is on open interest of about 2,500 contracts, so this is all opening paper. We also saw what looks like looked like a vertical spread at first, but apparently it's just some closing buys of the OCC 28s, and looks like some 29s went up as well on mixed volume as well. Both of those have open interest of about 5,000 and 2,000 respectively. But yeah, the big trade today, the one that's interesting, is this continued upside bet here on this Jan 30 strike in PPL. If you look at the chart going back a few years here in PPL has flirted with the 30 handle a couple of times, most recently back in November of last year. But since then, it's had a pretty errant trajectory. It's been all over the place, from down in the mid 20s, actually almost 24 handle, all the way up to briefly touching 30. So this guy betting that there is some more upside to be had here in PPL. Andrew, I know how much you love it when people come in and just wantonly buy upside without any thought to perhaps spreading it off or ratios or anything like that. So I'm sure this trade is ranking very high on your savvy scale, sir.
I'm thrilled with this trade. I'm kidding.
Is this one of your mentees at work?
Yeah, I mean, what did you just find? Oh my gosh. I think people buy options and they just and they hope that they're going to go up and the stocks. I don't know what really they think, to be honest.
Is that your expert opinion? That's hence the lottery ticket moniker. There is a lot of that. Lottery ticket moniker.
Although this one is, at least it has a chance, though. I mean, we are talking about January. It's not so far out of the money. I mean, it is not the total goofiness that we've seen on some of these trades. It's a reasonable long shot. I'm going to say it's reasonable. Implied volatility is pretty cheap, but we're not talking about a mover and a shaker of a stock either. But not. What's amazing is it's barely moving the volatility needle in this thing. So
I did notice here it passed two resistance levels last week, 2808 being the first traders were looking for. That was on Tuesday of last week, and then 2831 we surpassed late last week. Now we're back to 2860, so maybe this guy on the Jan 30 calls is on to something.
He's reading some charts. So that's a good segue then for later when we dive into some technicals in the old listener mailbag. But for now, that's going to do it for the old odd block. And now we're going to dive right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the old odd block. This is where the boys from OX, in this case, Mr. Sean, hold down the reins of the show while I go have a nice tasty beverage. So, Mr. Sean, what do you have in store for us today, sir?
Got a couple things for you. First, we're going to touch on American Express. They got a nice lift today after the Visa MasterCard $7.25 billion settlement to their retailers. I was noticing a lot of the July 60 calls, about 2,200, were going anywhere from 18 cents to 43. Again, a little bit of a risk expiring this week. Stock closing at 58.64. 2,200 of those 60 calls are going off today.
Gotta love that upside. Just what we're just talking about again. That's a recurring theme in the odd blocker throughout this show. Just buy the lottery tickets and swing for the fences, right? What can go wrong?
And they're purely benefit from the settlement of the Visa and MasterCard. And then on the downside, good old Chicago company Groupon possibly should have taken that $6 billion from Google. Company now valued at around $5 billion. And dropping. Last week we had the 52-week low of 725. Today, noticed some interesting volume here on the August 10 calls. Looks like some easy premium there. 5,300 contracts trading on August 10 calls, anywhere from 25 to 30 cents. And on the flip side, the August 5 puts, people were buying on the cheap for 20 cents. Saw 900 go off there.
So maybe some savvy people legging into a nice bearish risk reversal here and
exactly
specking on some. It'd be a roughly 5-to-1 ratio risk reversal. So not all of them very savvy. Most of them seem like they're just blasting out premium here on that 10 strike. But you're right. Yeah, some interesting activity in good old Groupon. And I think a lot of us the show wasn't running, I don't think, when that was first announced, but a lot of us here on the show have since pontificated many times about how Groupon really missed out on some on a great deal with that, and now is perhaps reaping the whirlwind of that decision, because not only did they not get Google's money, but now they're competing directly with them, and Google has a lot more cash to throw at this sort of thing than they do. And of course, Amazon's in the Amazon local space now. They also have a fair amount of cash to throw at this type of thing, so they don't need it to be their main revenue driver, whereas Groupon does. So that puts them in a little bit different competitive scenario. So some interesting activity going up. Were you guys getting a lot of calls on the desk for either of these, MasterCard or Groupon?
Not really MasterCard. I was getting quite a bit of calls on Visa, the upside, as well as American Express. MasterCard really wasn't too much in the picture today. Facebook as well, as we touched on earlier. More and more people loading up on puts, a few months out. $25 puts, $26 puts, August, September. And moving on over to Big Ben Bernanke's next 2 days of speaking. He's got Tuesday, a semi-annual testimony about the economy. Is going to be, usually that's aired on CNBC throughout the day. He'll be talking to the Senate on that. And then on Wednesday, the House Financial Services Committee. But what I think everybody wants to hear is some more Q3. But pretty much what he's going to be telling Congress from, just reading around and listening to his last few FOMC meetings is he wants the lawmakers to act. So I think you might see quite a bit of movement up and down throughout the days, the next few days. Possible some good trades in the VIX, as every single word that Bernanke uses could be taken one way or another. I think that Bernanke's he's warning Congress if they fail to act. He keeps talking about this whole quote-unquote fiscal cliff, estimated to be in a range of 720 million, really ain't too much. 720 billion with the tax breaks and expiring December 31st. And then we got spending cuts that will stop as well, starting Jan 1st. But what I think a lot of people are failing to know with the election coming in November, what Bernanke wants and what the lawmakers are going to do, probably not too much. Nobody really wants to make a large move doing something.
No,
not with November.
Nervous not with November
up to the election.
Yeah, November is looming, and the Fed is notoriously reticent to do anything anyway, pushing it off to the lawmakers and vice versa, and now with an election year, just doubly so on that front. So I would be surprised if Bernanke comes out spitting fire this week and starts talking about infusing billions or trillions more into the economy. But we'll wait and see, of course. But yeah, I agree. I don't think that's a very likely scenario. All right. Thank you for that, Sean. And that is going to do it for the old Xpress Block. And now we're going to dive right into the listener mail segment.
Now it's time to empty the mailbag and see what our listeners have to say. It's the Mail Block.
All right, and welcome to the old listener mail block. This is, of course, the portion of the show where you, the listener, get your chance to weigh in. And our first one comes from our forums on the old optionsinsider.com by the user going by the handle of thepostguy. And he writes about implied versus realized vol for credit spreads. And he writes, when considering volatility levels in opening a credit spread, which should have more weight in that consideration, implied vol or realized vol? Or do both need to be considered in relation to each other? By the way, love the shows. Where else can one listen in on discussions regarding options, movie reviews, and the mating habits of aquatic life? So, Andrew, the post guy, loving our chat last week about horseshoe crab mating rituals, apparently. We've got a listener for life now.
Exactly. Where else? Well, we try to be entertaining.
Yes, we try to mix it up a little bit. Once in a while we succeed, once in a great while. But and also movie reviews, yes. We have had some of those of late. But he writes in with an interesting question, a kind of a question on a theme I think we've heard a number of times in the past, talking about implied vol versus realized vol. And you know, there's a simple answer to that question, which is, of course, you're pricing everything off implied, so that should be your first and foremost consideration. That's kind of the obvious answer. But then when you dig into it a little bit more, there's, of course, the discrepancy there between implied and realized, where implied should, of course, be some sort of reflection of what's going on in the realized vol market, but that is not always the case. If you're looking at a lot of options, you can really see, we talk about this all the time in VIX options, talk about this all the time in a variety of other underlying and options out there, where options from an implied perspective really appear to be mispriced given what's actually occurring in the actual vol of the underlying. And so that's really where I think those two need to be looked at, is when you're looking for those types of discrepancies. You want to see something where, if you're a premium seller, which I'd imagine a lot of our listeners are, if you fall into that side of the fence, he's talking about credit spreads, so this is certainly his ball of wax. You want to find something that has ideally a super exaggerated implied vol level, or at the same time a very, very low level of actual realized vol. You don't want something that's going to whipsaw you out while you're waiting for this credit spread to pay off. So that's where I typically fall on that line. First and foremost, implied vol, because that's what you're trading. Not too many products out there except for the old VolX vol contracts and a few other OTC things where you can really trade actual realized vol. And don't get me started on using straddles and trading delta neutral, because that's about as imperfect of a process as there could be, and very expensive to do that way. So I don't really consider that trading pure vol. But in this sense, I tend to look at the implied vol versus realized vol for discrepancies and then trade those accordingly. So that's kind of where I come in on that. Andrew or Sean, do you guys have dissenting opinions, or perhaps want to add to that?
I think on looking at, obviously it's but everything to me is always about how far from the kind of the at the money strike you want to put these together. I'm a big believer in realized volatility. I don't think a lot of people watch it enough. You go jumping into a spread where the underlying's whipping around a lot, much more than the implied volatility then it's pricing. So I think if you're not really paying attention to underlying volatility, even though you feel the implied's a little high, you might not be getting what you want out of the trade. I think in that case, I like really seeing the realized volatility doing what I want, which generally, if you're selling that stuff, is to be declining. It's mostly where on the curve are those things happening? Are they still increasing, or are they starting to decrease a little bit? So that helps when I want to put one of those, when I'm looking for those trades overall.
I'm encouraged here that he's writing in about realized vol. That shows he is a listener to the show, not just that he likes our horseshoe crab mating segments, but he actually is listening to the show where we do talk about implied versus realized vol and the discrepancy there. So that's definitely, he definitely has a leg up if he's even considering that in his trades, because the vast majority of the traders out there don't know the first thing about realized vol and how it should impact their trading decisions. Sean, what say you here to Mr. the Post Guy?
I just, reach out to our listeners here. When you're looking at realized volatility, something looks a little bit off, too good to be true. You may want to look a little bit further into the stock itself. Could always be earnings looming around the corner. If it's a drug company, there could be an FDA approval waiting any day now, or possible merger amongst companies. So if you see some kind of realized volatility that just seems there's no way it could be this high or this low, you might want to look a little bit further into the company because there could be some news on the way.
All right. Thank you for that, Mr. The Post Guy. If you'd like to follow in the Post Guy's footsteps, then by all means, hit us up on Twitter or post on our forum at theoptionsinsider.com or on our Facebook page. There are any number of ways to get in touch with us, and perhaps you too can be featured on our listener mail segment next week. But that's going to do it for the old mailbag today because we're running a bit long, so we're going to dive right into Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, the portion of the show where we look into the future and attempt to divine what's going on in the old markets. As Sean alluded to earlier, there is a lot of Fed action and Fed talking going on this week, which will keep a lot of people, I believe, keeping their powder dry, even though most people, I think, expect or I think they have a handle on what to expect coming out of the Fed this week. Andrew, what in particular are you watching going into the rest of the week here?
I'm looking to see if we can get the gold implied vol get a little lower. That's number one. Ahead of Bernanke speaks. If they're not going to do the big roll or big twist or whatever the heck they're going to try to shenanigans they're going to play now, generally kind of pounds the gold a little bit. And of course, we're watching all these ags just take off. We've had just another day of record corn prices. So as when I'm seeing how that generally plays out, I don't think it's going to be good for stocks that use corn-based products because all that stuff's going to get more expensive real fast. What's amazing is I haven't seen Coke or Pepsi really. I guess Coke it hasn't really done much since the start of all this, but I like, because they're, corn syrup, and that's a huge piece. Now, I don't know if that's going to be more of a trouble for the bottlers but Coke does use corn syrup in their, obviously when they send those big containers of Coca-Cola out. So, if there's no corn or the corn crop is really, what's it going to do for Coke's earnings next year? So, I'm just trying to see if there is any kind of short-term action as corn just rides up. And we're just looking at, there's a proxy for the corn future, which is CORN. It's a ETF that trades three future contracts, like a weighted average of them. It's a pretty good proxy. Actually, it's a very good ETF proxy for corn futures. So if you don't want to get PFG bested, you can just stay in the equity market. Let them worry about it.
There you go.
The options are very liquid now on it. The volatility is high now, but it's definitely picked up some paper and some action. So that's kind of the two things I'm looking at. Watching just vol sort of crumble here going into the earnings season.
All right. Thank you for that, Andrew. And, of course, Sean, what are you watching here around the block? Actually, we should mention here as we're talking about things coming up, there has been some breaking news today. We were watching, you said earlier in the show you were watching Yahoo pop. And, of course, there is some news now coming out of Yahoo that they have indeed hired former Google executive Marissa Mayer as their new CEO. So Yahoo stock up a bit on the news, and of course, given the activity we've seen in Yahoo lately, it can only go up at this point. The news, I suppose, can only be good given the string of dire news we've seen coming out of that name. Seems to have eased off a bit. Was trading well into the 16 handle in the after hours, trading about just around 16 right now, which closed at $15.65. Might be interesting to see if this could breathe some life into there. Maybe this is perhaps a way to strengthen the ties between Google and Yahoo going forward, maybe leading to inevitable acquisition or something along those lines. It'll be interesting to see how this plays out. Did you get a lot of calls about Yahoo today, Sean?
We did get a few. I mean, 52-week high is 1679 on this. I think if we get near that, you may see a nice surge, and then possibly a takeover sometime in the maybe 6 months or so.
Now, you talked about the Groupon deal before and takeovers here. This is another name. Talk about famously turning away, what was it, $32 a share from Microsoft a few years ago for this one, and just never looked back to that level or anything. It might have been high 20s. I forget the exact level, but whatever it was substantially higher than where it's been trading ever since. So another one where the shareholders not exactly enthused that the management turned down such a banner deal. But aside from management changes over at Yahoo, what else are you watching here coming up? Of course, you mentioned the Fed. And of course, we do have, as we discussed on the last show, it is that time of year again. It is earnings time. We have Goog coming out on the old 19th. A lot of tech names on the 19th. AMD, Microsoft, and a few others. And, of course, my favorite, Sean, I refer to this as the stealth Apple, the lesser-known Apple, CMG. Because for a long time they were trading at around similar price and vol levels, and you could trade in and out of them. They both perform similarly well, not but up. CMG also on the 19th, so a lot of earnings coming out later this week. Any that particularly catch your eye there, Sean?
Yeah, I think the next 3 days are going to be some pretty important days. Friday, I think you can sleep in, but Tuesday, Wednesday, Thursday. Tuesday, tomorrow, we got Coca-Cola, Goldman Sachs, Johnson & Johnson, Intel, and Yahoo, as we spoke earlier. Also, on Wednesday, we have a ton of banks, Bank of America, U.S. Bank Corp, PNC, Northern Trust, to go along with American Express and IBM. Also, on Wednesday, the Fed Beige Book, which comes out 8 times a year, can give you a little briefing on how they feel the economy is going. Probably will have a little bit correlation into Bernanke's speech on tomorrow on Wednesday, and they come out with that Beige Book news at 2 p.m. Eastern Time. And then on Thursday, as you mentioned, another ton of the Google, Microsoft, Chipotle, like you mentioned. We also got Blackstone, Morgan Stanley, and ISRG, as well as the old jobless claims to close out the week. Friday looks a little bare besides GE and Schlumberger.
Well, don't forget, of course, Expiration Friday. So all sorts of fun.
Oh, there is that important Expiration Friday as well.
From an options perspective, that of course we tend to forget about that one every now and then. But that, of course, I'm sure you guys will be quite busy that day as well, as we are creeping up here on July expiration. As we are always want to do here on the show, we always caution our listeners, if you do have those shorts that are coming your way, or if they're coming close to being in play, by all means, take them off the books, take your nickel, take your penny, whatever it is, and close them out, pay up. Don't be afraid. Call Sean. He'll walk you through it. I'm sure it won't be very painful. And just take off that risk, because how many times have you seen Sean around Expiration Friday? Some crazy news comes out, and there you go. Those calls or those downside puts that you had sitting in your back pocket that had decayed down to a penny are now trading $5 or $10. Look at last year, talking about Google with the Google MMI acquisition, and that stock gapped up 10 handles in a relatively short order. And so you don't want to be caught on the losing end of one of those trades. So if you have something that's gone your way, I know a lot of our listeners like to lean to the dark side and get short premium. If you have a trade that's gone your way, by all means, close it out. You and your broker will be the happier for it. So with those words of wisdom, that's going to do it for the Around the Block segment. That's also going to do it for this episode of the Option Block. But before we go, I want to thank my cohorts here, my partners in crime, for joining me on the old panel today. Starting off with you, Andrew. What is coming up in the land of the pit?
Landon, we have some nice, well, we always have nice things. I shouldn't say just, but we do have lots of nice stuff. Free webinar, Adjusting Butterflies. This is Mark. I might be sitting under this, but this is really some of the best stuff he does for basically how to adjust positions that start to go a little awry. So, and it's a great webinar, very practical for people, we all like selling juice. sometimes, and it makes a good, just a good practical trading technique. So that's a free webinar at Option Pit on Wednesday at 7:30, and of course he's doing his all-day seminar at 9 a.m. On Saturday from basically trading the VIX products or any VIX-like instruments. So lots of good stuff going on at Option Pit besides, our daily Option Pit Live, where we basically break the market down for an hour live via webinar, ask us about trades. So all those things are moving along swimmingly.
All right. Thank you for that, Andrew. And of course, Sean, what is coming up over in the land of OX that may interest and or intrigue our listeners?
We've got something coming out called the Idea Hub. It's been released to probably about 50,000 of our customers already, and it's going to be sent out to the rest of them shortly. Basically, the Idea Hub is, suppose we'll just pick JP Morgan. You have a slightly bullish outlook on it, and you're looking for some sort of credit spread. Type in the parameters, what you're looking for, daily volume, and what we'll do was pull up probably anywhere from 10 to 20 different examples. Now, these are not recommendations by no means, but they are something to look at in regard to the parameters that you're looking for, and you can do this for almost for any stock. And again, it's called the Idea Hub.
And that's out now, or that's coming soon?
It's out to a majority of the clients. Will be released shortly to the rest.
And do you find that
throwing it out in batches?
Do you find that in education, or where do you find that?
It's going to be listed underneath a toolbox section. It's called the New Idea Hub.
Oh, we'll have to check that out and kick the tires and light the fires.
Yeah, I mean, basically what it's going to give you, suppose you chose big movers, it's going to give you about 286 ideas. Now, again, I stress ideas. These are not recommendations. You can do earnings. We have a section called premium harvesting, which is more of an income trade, as well as covered call ideas. So there's 4 different sections within the Idea Hub that I think a lot of our clients and hopefully soon to be new clients are going to like.
I'm checking it out. I'm logging in. I don't think I'm one of the customers who's received it yet, so I can't kick the tires yet. But as soon as it goes live, I'll play around with that one. And I'm seeing.
Yeah, it's pretty interesting. I think you'll like it.
Yeah, it looks pretty. I'm looking at it. I don't see it yet, but yeah, sounds certainly interesting. And of course, a lot of our listeners love that, and they need that. Of course, you have to be. Let me start the whole thing over. Of course, you have to be careful. It's not recommendations. We all know compliance loves that, but they are great ways to generate ideas. And customers want that. They want to be able to come in and say, here's my outlook on, like you said, JPM or whatever the underlying may be. Give me some ways that I could use options to more intelligently play this outlook that I have. So you're not giving them an outlook. You're just giving them ways to execute on their own additional viewpoint, or existing viewpoint. So interesting stuff. I think a lot of brokers are really getting into that idea generation space. It certainly is an active one. And like I said, it helps your clients who come in there looking with having their pre-existing viewpoints. We, of course, want to thank all of you out there for downloading and streaming and subscribing to this show and making it such a success, especially all of you out there who really love our segments on horseshoe crab mating rituals. We'll have to have more of those in future shows. But, of course, we want to thank all of you out there for downloading and streaming and subscribing to the show and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.